guest is Doug MacDonald from Murray and MacDonald Insurance. And before I even say that, he's flanked to his right by his son, who's a returning guest, Peter MacDonald. So welcome, Doug.
Welcome. Thank you, Jeff. Good to meet you.
Thank you, and Peter. So why don't you tell us first about Murray and MacDonald Insurance?
Okay. We're an organization that was founded back in the early 70s, and it's evolved over time, but our focus today is helping clients identify risk and reduce their chance of risk. I messed that up.
No.
We'll take another shot at it.
Can we start over?
Cut it out.
Can we
Cut it
start
out. Keep
over?
going. Just keep going. I
Okay.
can't know.
We work to help clients identify their risk exposures, treat them, and reduce their cost of risk on a long-term basis.
So how does that work? I'm a client.
Sure.
Tell me what you asked me.
That's hypothetical for our listeners.
Well, you know, typically a lot of times, what had happened, let me just back up a little bit. I've been in the business for 30 years, and traditionally agents would take a look at your program and say, okay, let me, look at your insurance and see if I can save you some money. And the focus had always been on the insurance policy itself. But if you think about today, in fact, Lloyd's of London puts together a risk survey every year. And they find that business owners, they list out what are the top 50 risks that they put out there. And surprisingly, it's not insurance. They don't talk about that as the risk. I mean, they'll talk about reputation risk. You can think of Penn State, Jerry Sandusky. What did that do to the school? That's a risk that they face.
A lot.
Sure. How about Target right now? Cyber liability. What has happened to Target and their reputation as opposed to being penetrated? You have exposures like that, and what we found over time is that in today's environment, working with clients to help them identify risk exposures on a proactive basis and then figuring out ways to design and implement plans that will reduce their long-term cost of risk is where our focus has moved to. So we work more as a risk advisor.
So let's be clear what kind of insurance you're dealing with, because people are mixed up sometimes with risk. Are you a property and casualty firm? Are you doing benefits, executive benefits? What area do you focus risk on, or everything?
We look at it holistically when we talk to a business owner, or if it's a nonprofit organization. So we'll work with property and casualty, we'll work with executive benefits, we'll work with group benefits. If you think about a business owner, just from this perspective, they had identity theft. What did it cost the organization? The downtime, right? We call it the soft dollar cost. What did that cost them? So if you're just looking at one part of their organization and you're ignoring another part, you're just looking at and operating in a silo. So to your question, we work as much as we can identifying various risk exposures and advising them how best to treat them.
So how would you